What's going on, YouTube? We back with another video tonight, and as always, we are talking about the ticker symbol SPY. And as you can see, this is overnight. Up here, you can see that we've dropped $12.83. We've went from Friday to being, this is all Friday here. As you can see, we just had a decent amount of consolidation. This was on the 5 minute, but we actually want to go, let's go to the 1 hour. This is what we want to look at it on. So at market open, which was in between here and here, we can see we had a slight pop up, and this is all on Robinhood. So if you look at my previous videos, you'll see that we had this level marked out, and we said that we would come over here to this level, which was the 672 to 669 area, and we gave a little bit of consolidation here after market, but you can see the minute that we passed this level here, we continue to the downside. So I only targeted here, but I was under the impression that we would get some more interaction with Iran, because Trump was telling us that he was going to bomb them again. So that was something to just be cautious for. So now we have this big, large pullback. A lot of people may say that the market is crashing. I don't believe in a market crashing and like it's going to stay down forever. It's truly not. If I come all the way over here, you can see that we're now lining up with this level here, which was in November of last year. So we're just back at those levels, right? If it does continue to fall, we may get down here to the 649.45 area, but that would just be after a slight pump. So if we get a push up and we hit here at this level again and we retest it, we could potentially just fall back down to the 656.80 area. If we come up and this level doesn't hold, we're going to be looking to fall back down to the 649.45 area, which if you look, the market just moves in phases. We're over here at this level here. It's just all about knowing the candlesticks, knowing your timing, and just being disciplined and only following your rules. Me, I believe what I'm going to start doing is swing trading with smaller amounts and allowing the market to move wherever it's going to go. Take my loss when I take my loss, but I believe I'm going to start trading on the higher time frame. I do a lot of scalping, so I'm in and out because I just don't, it's fear of losing, which that's not the way to be in this game. So I believe that the stock market is what is going to change my life and generations after me as well. And I'll be able to leave my kids with things that I never had, which is knowledge and having wealth. So what I would be looking out for tomorrow is a pop in the market, because buyers will start stepping in, because this is a good level to start buying at. Again, the last time we were at this level was November, so it was just a little bit over 4 or 5 months ago, and this is where we had our pop-up, our big pop-up, to where we ended up having this level here. As you can see, when we had a strong pullback, which was this dip into the market here, which we almost not could have predicted it, but we could have taken this into consideration, is when we're at this level, if we look over here and then we come over here and look at this level, it lines up the exact same. And you can see anything underneath this level is bearish, and anything that gets above it is bullish. So you look above this line, everything is pumping up. Any time that it gets underneath it, it's always moving in a bearish momentum. So we are falling, but this is the area that, if we get down here, it's always been a pump back up. See, pump up here, pump up to the upside as well. So buyers may step in the morning or overnight, because this is a great buying opportunity to buy low and sell high, buy the dip, sell the rip. One of the most smartest things I've ever heard. So what we're looking for is for the market to break up or pop up, retest this level here. It may give us some bearish indication a little bit. Looks like we're coming back down, but we're waiting for a higher high and a higher low to form and a break of structure. And when that happens, I am going to swing trade, and I'm going to hold it all the way back up to where it continue back up to highs, or wherever I'm comfortable at. So I would probably hold it all the way back up to at least this level here, which is 683.14. So this is my market analysis. I would just be very cautious with everything that's going on. We're just in a like a iffy phase when you have, you know, the manipulation within the market of us, you know, bombing and going to war with people. So we're running into that issue, but there's always a reason as to why the market's going to move down. The market makers are always going to find some way to get the market to pull down so that they can invest more money into the market, which is going to make them more wealthier. So just understand that if you have lost money, if you put in a call or, you know, on the end of the week and now you're in, you know, drawdown, it's probably going to be heavy in the morning. But for those that did take a put, you know, at the height of this here, because we had double tops, it just could not get above this level here. So you see this level, it keeps tapping that zone and it fell underneath. So this was support at one time. It broke support, retested support. And since we couldn't get above that, now you see it pushing down. So for anybody, but it was still some bearish fatigue here. But for anybody that decided they were going to take a put to ride it back down to, there was one more level underneath that level, which was here. That was going to ride it down to the 646. I believe that's right. Anyone that was going to write it down to 668 or 664, you could have predicted that, and you're probably gonna, I mean, the market probably made a ton of millionaires just over the weekend with this small move here, especially for anybody that's in SPX. You know, if you're looking at, you know, a $13, a $90 drop, you know, on Friday, plus another $130 drop, because for every dollar is $10 with SPX. So you're looking at a $130 drop just there. So we're talking about, you know, a little bit over 220. So those people are definitely going to get paid in the morning when you wake up if the market is still moving in a bearish direction. But that's just my market analysis. I won't really know and understand what I'll be taking for tomorrow until I see what the market does in pre-market and how it reacts. But this is definitely a good buying price to ride back to the upside. If it does flip on you, get out. Dollar cost average in and ride it right back up to the top. But the market never stays down for long. This is one of those opportunities to invest in the S&P 500 and hold it for a very long time. That's all I got for you. Make sure you subscribe to the channel, share the video, share it to someone that may be new into option trading or just trying to understand the market. I am not a guru. I just go based off of what I feel and what I think the market is going to do by just studying the chart. That's why the name is Chart Geek, because I am just fascinated with how the charts move and everything like that. So like this video so that it stays in your algorithm. Make sure you share it to someone, subscribe to the channel, and we'll be back with another video tomorrow night.